Hello, Sebastien, and thank you for joining me today.
Hi, Scott. Good to be speaking with you again.
Sebastien, 2020 has been a very busy year for Endeavour. We last spoke in September, a month or two after you closed the Semafo transaction. Now, since then, you've completed the Teranga acquisition, which now places you as the top 10 gold producer.
That's right, Scott. I mean, it's been a busy and transformative year for us, while we are now beginning to see the benefits of our increased capital markets profile, given our increased size. I would say it is important to keep in mind that these acquisitions were first and foremost driven by strong industrial logic. We are now the largest gold producer in the world's second largest gold producing region. We have also the largest exploration tenements and the largest exploration budget in the region. And I think that this competitive advantage is now unmatched. It places us as the go-to investment for funds looking for exposure to this geography, but also places us as the go-to partner for governments in West Africa.
So it's been an amazing journey for you, Sebastien. Where do you go from here? More West Africa consolidation, or perhaps even start look outside Africa?
Well, let me make it very, very clear, Scott. We are now solely focused on organic growth. Our goal has been over the last 5 years to create a geographically focused gold company in West Africa with a diversified portfolio of assets across several countries. And we are now what we consider in the sweet spot with a diversified production of 1.5 million ounces at low all-in sustaining cost. So it gives us the possibility to replenish reserves annually and ensure sustainable levels of cash flow generation. These transactions are really a culmination of the strategy that we put back in place in 2016. And we are now entering a new phase in our history. The first phase started in 2016 when I joined. This phase was really based on strong organic growth. We invested to $1 billion into the company to build our flagship assets, Houndé and Ity, and also in exploration to extend mine lives and feed our project pipeline. Last year, we were in the cash harvest mode, having significantly deleveraged our net debt from its peak of about $660 million to obtain a net cash position at year end. So we've been also leveraging our strong West African platform to consolidate those two acquisitions, Semafo and Teranga. And our new phase now will be again focused on organic growth to extend the mine lives of the newly acquired assets, and also to push our significant project development pipeline. We therefore believe that we have now all the ingredients to generate significant value in this next phase for our shareholders, but also through a strong, resilient gold producer across cycles.
So, Sebastien, you made it very clear there, no doubts about it. And I've indeed noticed the strong messaging on internal growth, and it ties into my next question. Now, you've realised the results of the Pre-Feasibility study for Fetekro and Kalana and announced the Sabadola-Massawa Phase 1 expansion. Talk us through the key points.
Well, Scott, I mean, taking a step back, I do believe that our share price has been hurt by the M&A overhang last year, and this is why I want to have a very strong message on our organic growth focus. There is a lot of potential to unlock within our portfolio, and we are committed, to doing so. Turning to the project press release update, obviously we are very pleased with the results of the PFS for both Fetekro and Kalana. We think that Fetekro has the potential to become a cornerstone asset with an annual production of over 200,000 ounces and at low all-in sustaining costs for at least 10 years, which is pretty attractive. Looking in particular at the economics of this PFS, it is a great example of how we can create value through exploration. I recall that we probably invested about $20 million only in exploration to date. And we have with this project already an NPV of over $500 million. And this shows the attractiveness, I think, of investing in greenfield exploration in West Africa. And we believe that we have obviously the right team and the right land package to continue to discover these type of projects. Looking at Kalana is also, an interesting project with an annual production profile of 150,000 ounces over a 10-year period. So far, it's been also a good investment. I recall we bought Kalana for about $120 million back in 2017, and today it has an NPV of above, $350 million. So we will now advance both projects to DFS level, which we expect to complete by year end. And then they will have both to compete internally for capital in order to decide which one should go first in terms of construction. Turning to our recently acquired mine, Sabadola-Massawa in Senegal, we've also launched the phase 1 expansion last week, which is the first step in unlocking the huge high-grade Massawa deposit, which was acquired by Teranga from Barrick. It's a small capex of $25 million, but it allows us to increase production by 90,000 ounces by simply debottlenecking the back end of the plant. And in parallel, we are progressing the DFS on its phase 2 expansion, which should demonstrate that this asset has the potential to be a tier 1 asset with a production of over 400,000 ounces annually and at low cost.
So Sebastien, given you are pushing ahead with the expansion, I gather the integration of Teranga is going well.
Indeed, Scott, it's going very well. I would say that as this was a friendly acquisition, we did set up an integration committee shortly after the announcement back in November, which basically gave us up to 2.5 months to be ready for the closing. And the other thing I think is also that the two businesses had similar way in running their business, and from a pure cultural standpoint, it's been extremely easy to integrate those new staff. So pretty happy how things are going on there.
So you'll have to excuse me, Sebastien, but the conversation has been monopolized by M&A and project talk. I should perhaps have started with a question on your operational performance and the COVID impact.
Sure. In this point are still very topical. Oddly enough, when things are going well, it's not an attractive conversation. But we are extremely pleased with our operational performance in 2020. Despite the COVID impact, we were able to meet our guidance, and this was for the 8th consecutive year, reaching both the top end of our production guidance and also the low end of our all-in sustaining cost guidance. And this has allowed us also to significantly deleverage our balance sheet, and as you saw, initiate our dividend with an attractive yield. So so far so good.
So how have you managed COVID then, and will you be vaccinating your workers?
Well, I think we've been very fortunate to date as a business. We haven't had to suspend any of our operations, and our supply chain hasn't been negatively impacted either during 2020. Thanks, I think, largely to our decision to refocus our procurement to West Africa region back in 2019. So it has helped, lowering the imports from outside the region. Talking on the human side of the pandemic, again, we've been fortunate not to have lost any employees to COVID, and I think in particular through the strict measures that we did put in place early on mid-March 2020, and through that we've been able to contain and keep our staff pretty safe. We've also supported our host countries and communities. It's been very important to show that we were standing by them in a time of crisis, and we have leveraged our resources across to assist the national efforts that our host countries were doing, donating medical equipment, supplies, training to both communities and government entities. Having said that, from a well-being perspective, I think all our employees have had moments when the lockdown has been tough, and it's important that we recognize this, and we've put in place various programs to help them. Some expatriates, for example, had difficult rosters where we had to extend their swings from 6 weeks, 3 weeks to up to 12 weeks, 6 weeks. So staying quite a while away from their family. Increasingly, I think as an industry, we are mindful that zero harm isn't just focused on safety at the mine site, but also means taking care of our employees' mental health too, which is why I'm particularly impressed with the team and the commitment they've shown to Endeavour over these past years. As for vaccinations, naturally, we will support the national efforts of our host countries in West Africa. At the moment, there is still such a queue for vaccines that priority is only being given to host nation and not, to companies. But let's see how this develops over the course of the next 6 to 12 months. And I know that there are some efforts going on, to try to improve all that.
Well, it sounds as if you've done an excellent job at managing what is a very difficult situation. Now, you mentioned exploration earlier, and I'd like to just pick up on that point. You've had a good track record on finding ounces, both in the existing mines like Houndé and Ity, as well as discovering projects like Fetekro. I see your recent update guidance that you've allocated 70 to 90 million US dollars this year. That's got to be one of the largest exploration budgets in West Africa, isn't it?
Yes, probably. We've long been excited about the prospectivity of the Birimian Greenstone Belt. We have one of the largest and probably most promising portfolio in West Africa, with particularly a strong foothold in the Houndé and Ity belts, and over 200 exploration targets, which are put through our exhaustive screening and filtering process to decide, which one we need to focus on. This approach has been very successful so far. We did set out a 5-year target back in 2016 of discovering more than 10 million ounces, and after 4 years, we are about 85% there. What has been particularly pleasing is that we are getting there with a discovery cost of around $12 per ounce, which from our record is probably 6 times lower than the average for the region. And as we have secured long lives at our cornerstone assets, Houndé and Ity in particular, and are able to generate significant cash flow, we think now is the right time to increase the greenfield exploration spend and be able to continue to grow this organic growth pipeline.
Now, we've talked quite a bit about operational achievements. Before we discuss the financial performance, let's talk ESG. This has been a core business issue, and the investment community is increasingly focused on measuring ESG performance. Tell us about your approach.
Well, for us, ESG is very straightforward. It's about making sure we have a social license to operate from our stakeholders. And this covers all aspects, such as environmental stewardship, community engagement, social investment, procurement, human rights, you name it. And it's important to lead from the top on this issue. And that's one of the reasons why I make regular trips out to West Africa. It's not just to visit the operations, but also to meet with communities, government, ministers, to ensure that we have good open lines of communication and to build up trust and solid relationships. So if and when there are any issues, we can deal with them effectively and in a respectful manner. Alongside this, to ensure this is really embedded throughout our business and our day-to-day decision-making, we've also aligned both our short-term and our long-term incentive schemes with tangible ESG targets. I think this is a crucial point, and no one that isn't as widespread across the industry as it needs to be. And then finally, alongside having the right systems and processes in place to monitor and report on our impact and initiatives, it's also about going beyond just meeting the minimum requirements and making sure you implement international standards or best practice wherever you can. As you know, we are members of the World Gold Council and have pledged to implement their ESG framework known as the Responsible Gold Mining Principles. This is a very comprehensive framework, and I think a good and necessary move for the industry, as it will give investors greater confidence to invest in this sector.
Now, I see that you haven't come out with an emissions reduction target as yet. Is this something we can expect from Endeavour this year?
Yes, absolutely, Scott. We are all well aware of the need to have a climate change strategy in place, which includes an emissions reduction target. Last year was such a transformative year for us. We really needed to complete the 2 acquisitions and integrate the assets before we could come out with a meaningful target. We already report annually on our emissions and energy consumptions. And in fact, last year was the first year we reported Scope 3 emissions as well. Being in Côte d'Ivoire, we already have the advantage of the grid, having a large component of renewable energy coming from hydro. In Burkina Faso, the government has an ambition plan to become a net exporter of solar power. And we have identified, in fact, solar opportunity at 1 or 2 of our mines in Burkina and working through the details right now. So we expect to announce our climate change strategy this year.
Now, you've talked about the strength of your balance sheet. How do you maintain that strength with all the organic growth that you've talked about for this year?
We are well positioned to generate significant free cash flow during 2021. As well, we should benefit from a full year of free cash flow from the acquired assets, Semafo and Teranga. Meanwhile, we anticipate the first phase of the Sabodala-Massawa expansion to be completed for only a modest, I would say, capital cost, while keeping at the same time the mining operations during that period. So what's great is that the envisaged capex for our growth project is of pretty low capital intensity, specifically when compared to our cash flow generation capabilities. It basically means that we can build a new project with just a few quarters of free cash flow generated. So our balance sheet position will remain extremely strong, which improves our ability also to reward the shareholders that have been backing us, for the last 5 years.
And how do you think about what those returns will look like for shareholders?
We announced at the end of last year that we would be introducing an initial dividend early this year, which this has now been paid beginning of Feb. Following the payment of this first dividend, we expect to declare future dividends on a semi-annual basis, with the goal of maintaining a similar level of yield until we have reached a net cash position target of at least $250 million. I believe that this net cash position is important to build this strong balance sheet buffer to be able to continue to pay a dividend during cycles and continue to invest into our organic growth. Once this target cash position is reached, we would be well positioned to reassess our capital allocation priorities, which may include either augmenting our shareholder return program through increased dividends or by way of a share buyback program. And we believe that there is the potential for shareholders to benefit from further capital appreciation driven by a potential re-rating following our listing in London.
Now, Sebastien, you've announced your intention to seek a premium listing on the London Stock Exchange. What are you hoping to achieve?
Well, given our new size, we think now is the right time to come to London. We decided to list there because we see the benefit of scarcity. With the removal of Rand Gold, the LSE has relatively limited option for those seeking gold exposure, and our peer group will be very favorable. We will be compared to either single asset companies with exposure to Africa or producers with exposure to Russia. On completion of the listing process that we would expect in late Q2, we would be the largest pure gold producer listed on the premium segment of the LSE. This premium listing will enable us to get into the FTSE indices as opposed to obtaining a standard listing. We are therefore creating a situation where investors will need to hold us as we are targeting FTSE inclusion, which is expected to drive over $600 million in indexation demand. And obviously, this is expected to be a strong share price catalyst for 2021.
So, Sebastien, with all the great outcomes over the last year, do you find it surprising that your valuation hasn't improved relative to your peers? The consensus target is nearly $50 a share, which is almost 100% above the current share price.
Well, I would say that as a significant shareholder myself, it is indeed disappointing to not see our success over the last 2 years not being rewarded and reflected in our share price. I'm, however, extremely confident in our re-rating potential and know which areas to focus on to deliver this re-rating. First, we need to stay on message and focus on our organic growth. So, M&A is over. We've got the right portfolio, and now it's about organic growth. Second, we need to keep delivering on our guidance as markets tends to reward, free cash flow. And as investors see the synergies being realized, day after day, plus the free cash flow generation from our enhanced portfolio of assets, we would then expect this to contribute to a positive re-rating. Third, we are now benefiting from the larger size and liquidity needed to attract generalist funds. Last year, we saw inflows going into the larger market caps, and because we were sub $5 billion market cap, we were not able to attract these investments. This now creates a large, valuation gap between ourselves and our new senior peer group. And lastly, as I mentioned before, we believe that indexation demand and potential to attract a new class of shareholders due to our UK listing should create additional appeal for our shares.
Well, Sebastien, thank you very much for talking to me today, and good luck with the year ahead.
Thank you very much, Scott. It's always a pleasure. I'd like to take just a moment to thank our long-term shareholders for their continued support. We believe the efforts that we've undertaken over the past 5 years now position us well for our next chapter. So, keep following.